This is Charlie, and he's got a huge problem. See, Charlie likes to dabble in the stock market, and just a few days ago, the biggest IPO in history hit the news. SpaceX just finished the paperwork necessary to go public, and knowing the cult like following around Elon Musk, it's only a matter of time before shares get snatched up by eager investors. Excited to learn more, Charlie reads up on the prospectus, eager to find out everything he can to get his foot in the door. After all, who wouldn't want to own a piece of the company aiming to build data centers in space? Establish colonies on Mars? Who knows, maybe even a couple of mass relays by 2030, right? But the more Charlie reads, the more something feels off. Like how a massive 30% of all issued stock is reserved specifically for retail investors like Charlie. At a glance, this seems like generosity. But Charlie knows the hedge funds, the venture capitalists, and the sovereign wealth funds would snap this up in a heartbeat. Maybe Elon's feeling generous? But that's not it either. Because reading a little further, Charlie and other investors like him would get voting rights, sure. Except that his vote is practically worthless compared to the ownership reserved by none other than Elon himself. The deeper Charlie digs, the more unsettled he becomes. But throughout his research, a question has been gnawing away at him since the very beginning. If this IPO rivals the GDP of most small countries, why are they flinging the doors open to retail investors like Charlie? And then he finds it, buried in the fine print. A detail so disturbing, it changes everything. Because SpaceX didn't just choose where to list. They made the exchange change its own rules to let them in at the last minute. If this is what's happening on the surface, Charlie can't help but wonder, is this really the opportunity of a lifetime as advertised? Or is it a trap that'll leave hundreds of thousands of retail investors like him holding the bag? This is the chaos of the SpaceX IPO explained. But first, we need to understand the convoluted spaghetti monster of a company known as SpaceX and their real goals with this offering. SpaceX was founded in 2002 by Elon Musk with one stated ambition: make humanity multiplanetary. Noble stuff, right? And for over 2 decades, it stayed completely private. No public shareholders. Just Elon, his rockets, and a very exclusive guest list of billionaires, sovereign wealth funds, and venture capitalists who got to come along for the ride. Under Elon's leadership, business has been good. Really good. Because in 2025 alone, SpaceX pulled in $18.7 billion in revenue, which continued into 2026, netting another $4.7 billion within just the first 3 months. But here's where things get interesting. The engine powering most of that juicy profit? Starlink, their satellite internet service, which ended 2025 with 9.2 million subscribers and over $10 billion in revenue on its own. So on paper, this is a real profitable, impressive company, right? Well, not exactly. Because even with Starlink, SpaceX is still operating at a massive net loss overall. Also, it's more like several companies wearing a trench coat. Let me break it down. You've got the rocket business. You've got Starlink. You've got a growing defense and government contracts arm. But quietly tucked in the back an AI operation that's been bleeding billions. But we'll come back to that. With all this being said, SpaceX has the potential to turn a massive profit if Elon's projections are to be believed. So why, after 24 years of keeping the doors firmly shut, does SpaceX suddenly want Charlie's money? Because on May 20th, 2026, SpaceX filed its prospectus with the SEC under the ticker SPCX, listing on Nasdaq. Trading potentially begins as early as June 12th. In other words, you can now buy and sell stocks of SpaceX, with the company aiming to raise up to $75 billion in funding at an eye-watering valuation of $1.75 trillion. An opportunity of a lifetime to earn some generational wealth, right? Naturally, retail investors are excited and waiting to get in on the action. But for investors like Charlie, reading through the fine print, they're starting to glimpse a completely different picture. And where better to start than the supposed vote that SpaceX shareholders would get for investing in the company? See, when you buy shares in a company, the deal is pretty simple. You put your money in, you generally get 2 things back. A slice of the profits either from the value of the stock increasing or dividend payments. And more importantly, a say in how the company is run. Think of it like putting up money for the renovation of your neighborhood community club. You pay your fees, and come decision time, you get a vote on what color they paint the lobby, what kind of furniture gets upgraded, what services the club should provide, maybe who sits on the board. Your vote might be small, but it's yours. That's the whole point. SpaceX will absolutely give Charlie his vote. There's no question about that. Except, just don't look too hard at what that vote actually does. Because here's the thing. Elon's vote counts for roughly 10 of Charlie's. Let me explain. This is known as a dual-class share structure. In other words, two types of shares, each carrying different voting powers. And it's actually pretty common in the finance world. Google has one. Meta has one. Snap has one. It's meant to let founders raise funding without Wall Street hijacking their long-term vision, or in extreme cases, booting them out of the company they founded. Sure, fair enough, right? But here's where SpaceX takes it somewhere else entirely. Because this structure isn't just designed to protect Elon's vision. He controls almost 80% of all votes with just 42% equity, because his shares are drastically more powerful than the ones issued to investors like Charlie. And what's more concerning is that this arrangement is mathematically guaranteed to make Charlie's vote irrelevant forever. No matter how many retail investors pile in, no matter how popular SpaceX gets, the S-1 filing itself confirms it. Elon retains no less than 25% voting control under any circumstance. Which means even if every single retail investor votes against Elon's decision to name their first Mars colony after his children, you can bet we'll still see a colony named something like Technomechanicus or worse. So, yes, Charlie does get his vote. Except his vote is useless. So what, right? Who cares about the vote? We're going to let Elon take humanity to the stars. And he's even being generous with allocating common investors like Charlie up to 30% of all shares issued during the IPO, which also happens to be 3 times more than the typical allocation. At first glance, it feels like democratization. Like Elon looked out at the average investor and said, "You know what? This one's for everyone. Come get your piece of the pie." The generosity of the techno emperor himself knows no bounds. Except here's the thing Charlie can't shake. Because SpaceX is targeting to raise $75 billion. At that scale, the hedge funds, the sovereign wealth funds, the institutional investors, they could buy this up like it's a regular day at the office, and they've been doing it for decades. SpaceX doesn't need retail investors like Charlie to fund their business. So what's going on here? Because if I were a betting person, it's because Charlie and the retail investors aren't just buyers. They're insurance. Because when millions of ordinary investors own a piece of something, they talk about it. They defend it. Just take a gander at Wall Street bets. They hold on to a stock even when the insiders already start cashing out. And remember, we've seen this very same episode before. The last time someone threw open the doors to another so-called biggest IPO in history and invited everyone in, that was Saudi Aramco in 2020. The institutions got in early, priced the dream at the top, and retail investors who bought into the hype watched the stock trade below its IPO price for years, leaving hundreds of thousands of investors holding the bag while the insiders, VCs, and hedge funds bought in low and sold out high. And look, I'm not saying history will repeat itself, but it often rhymes. So Charlie's not being invited to the party because they need him there. Charlie's being invited to prop up SpaceX's price while the early investors went big. But remember, this is all before we even include xAI. Because in early February this year, SpaceX acquired xAI, which led to rockets, satellites, cell services, and AI infrastructure all sitting together in one very cramped office cubicle. Now, on the surface, this sounds exciting. A rocket company with its own AI operation sounds straight out of a sci-fi blockbuster. But Charlie, ever the diligent investor, decides to look a little closer at xAI's books, which reveals a sea of red. Because as it turns out, even Elon's AI company isn't spared from the AI profitability paradox. Total damage? A loss of $6.4 billion last year. But hold on, if a company is bleeding that much funding, how does it even keep the lights on? Here's how. See, xAI's entire survival, its ability to keep the lights on, pay its engineers, and pretend to compete with the big AI players is currently propped up by SpaceX's profitable launch revenues and Starlink subscriptions. In other words, when retail investors like Charlie buy into SpaceX's IPO, they're not just getting the businesses in the green, they're also investing in a portion of the company that's hemorrhaging cash at an alarming rate. But wait, it gets worse. Because just weeks before xAI got folded into SpaceX, Tesla, the Cybertruck company, made a $2 billion investment into XAI. Basically, Tesla used its shareholders' money to buy a stake in Elon's other company against their shareholders' wishes. Yep. See, Tesla shareholders actually voted against this, and looking at the billions in losses, no one could blame them. The investment plan was even formally rejected under Tesla's own governance rules. But Elon did it anyway. Curious. Doesn't seem all that democratic if you ask me. So, when SpaceX swallowed XAI whole, the XAI stock held by Tesla was automatically converted into SpaceX stock as well, meaning that if Charlie owned Tesla shares, he'd wake up one day and find that the car company he invested in had quietly become a part owner of a spaceship company before the IPO even launched, even if he'd voted against it. See the pattern here? And remember, Elon controls the votes within SpaceX, which means Charlie's now staring at his shares and asking himself a very uncomfortable question. If Tesla shareholders couldn't stop it happening to them, what exactly is going to stop it from happening to him? Desperate for answers, Charlie reads up on the exchange that's facilitating the IPO, the Nasdaq. Surely they'd have some rules in place to protect the retail investor like him, right? Well, here's what actually happened. See, the moment SpaceX lists on Nasdaq, it automatically joins something called the Nasdaq Composite, an index that tracks every single company listed on the exchange. But here's where it gets interesting. Because above the composite sits the Nasdaq 100. Basically, the top 100 companies on the exchange by market cap. In other words, the biggest companies around. And this is where the real funding lies. Because the Nasdaq 100 is tracked by over 200 investment products, including the QQQ, one of the most popular ETFs in the world, with over $600 billion in assets under management. So when a company gets added to the Nasdaq 100, every single fund tracking it is required to buy that stock. Keyword: required. Historically, a company had to wait at least 3 months after listing before it could be considered for the Nasdaq 100. That seasoning period exists for a very good reason. It gives the market time to figure out what a company is actually worth, separate from the hype, the headlines, and the cult of personality around its founder. But SpaceX and Elon wanted it immediately. So SpaceX got to work. And because the Nasdaq and the New York Stock Exchange were competing to win the SpaceX listing, Nasdaq found a way to bend their rules first by introducing something they called fast entry requirements. Basically, this new set of rules, effective May 1st, 2026, means a company can now join the Nasdaq within just 15 trading days after IPO, down from at least 3 months. SpaceX then showed Nasdaq the paperwork. Very interesting. So let's recap. SpaceX gets listed on Nasdaq, which automatically includes it into the Nasdaq Composite. And thanks to the new fast entry rules, it's eligible for the Nasdaq 100 in about 3 weeks. Now, here's what that actually means in practice. Because the Nasdaq 100 alone is tracked by over 200 investment products, including pension funds, retirement accounts, and ETFs like the QQQ. Think of your 401k or Roth IRA accounts. And when anyone invests in one of these products, you're not picking individual stocks. You're buying a group of stocks that mirrors whatever's in the index, like a set lunch menu at the university. You didn't order every dish individually, you just said yes to the menu. And now the cafeteria has quietly added a new dish to it. You didn't choose it, you didn't ask for it. But it's on your plate now, and you're still forced to pay for it, even if you don't want it in the first place. So when SpaceX gets added to the index, every fund manager tracking it is required to buy SpaceX stock. No questions asked. Put that all together, and it means that millions of investors who never heard of SpaceX, never read the filings, never thought about dual-class shares or XAI losses or Tesla's converted stake are about to automatically own SpaceX at peak hype price. And the exchange that was supposed to be the last line of defense for the retail investor? It changed the rules because SpaceX asked nicely. I'm tired of this. So, where does that leave Charlie and the hundreds of thousands of retail investors? Well, if Charlie actively chose to buy SpaceX, he's buying into a company where one person controls nearly 80% of the votes, where the corporate structure is specifically designed to make sure that no matter what Charlie thinks, Elon calls every shot, even if every single retail voter disagrees with him. And if Charlie didn't choose to buy SpaceX, well, he might own it anyway, through his pension, through his index fund, Through the retirement account, he's been quietly contributing to every month, trusting that the system has guardrails in place. It does. Just remember that the rules can be changed under the right circumstances and for the right people. It just so happens that Charlie isn't one of them. So, the next time you see news about SpaceX's interesting business decisions, you'll know what's truly happening behind the scenes. For legal reasons, this video is nothing more than the ramblings of a skeptical observer about financial structures in a market economy. Please do not sue Fiscal Flow Finance. You're all truly wonderful. Stay safe, and we'll see you in the next one.